investment advisory services offered through Alpha Capital Management, LLC, a SEC-registered investment advisor. Alpha Capital Management, LLC, and SWAN-Capital are independent entities.
What your money would say. Andrew McNair. Money Talks. Are you listening? Money Talks. Are you listening? Money Talks. Are you listening? What your money would say with Andrew McNair.
Good afternoon. Welcome to What Your Money Would Say with Andrew McNair. I'm your host and also the founder of SWAN-Capital. And for the next 30 minutes and the weeks to come, every Saturday from 12:30 to 1 o'clock here on WCOA, we're going to talk about retirement and estate planning. And I will be your retirement expert. My goal at What Your Money Would Say is to help guide you through the rocky, unknown terrain that lies ahead in retirement. I started SWAN-Capital because I believe in what SWAN stands for, sleep well at night. I believe as a retiree, you've worked your entire life to get to this point. You've put kids through college, saved money, gave to charity, and it's time for you to sleep well at night. No longer should you worry about losing money in stock market, running out of money in a nursing home, or just running out of money, period. So I'm excited about today's topic, and that is about asset allocation. And I can't wait to have the conversation with Eric Bjorklund from Alpha Capital Management, where we're going to talk in depth about asset allocation for retirees. Now, I want to share with you a couple events that we have coming up here at SWAN-Capital and What Your Money Would Say. We have a couple veteran benefit projects, seminars, where you'll learn how to receive up to $24,000 a year from the VA. So this puts money in your pocket if you're looking to pay for assisted living and home health care expenses. Now we have 3 events coming up, and you can always check out these events on our upcoming events tab at swan-capital.com. The first one is at Sterling House, which is at 521, which is on Tuesday this week, and that's at 6 o'clock at night. We have one at Sable House there in Cantonment on the 23rd at 5:30. And then if you're out there in the Spanish Fort area or the Lillian area, we have Westminster Village at the 30th of this month at 6 o'clock. All righty, I hope to see you there. If you want any information, call us at 850-380-5137. That's 850-380-5137. And by the way, we also have college classes coming up on Social Security benefits. So if you're a retiree out there and you're unsure when to take Social Security, or just very confused about the whole Social Security decisions you have to make, come to our Social Security Benefits 101 classes. We're having one at PJC, and we have one at University of West Florida coming up in June and July. So stay tuned. All righty, let's jump into this article I have prepared. And this comes directly from Fox Business, and it was the 5 excuses why people don't save for retirement. But, you know, as with this show, we try to focus our efforts to retirees. So I kind of went with the title, though, Excuses Why People Don't Have the Retirement They Want. Now, the first one they list is too little earnings. And typically, I see this as a lot of retirees have their funds in CDs. Now, if you have your funds in CDs, it can be difficult to know what to do because you're stuck in the 6 months CD cycle with low interest rates, and you don't know where to turn. You know, you see the market having historic highs, but you're scared to make the leap into the market because you know not to buy at all-time highs, which is smart. But what do? You're kind of forced into just sticking with your low interest rates. Well, there are solutions out there, and I kind of shared with some options we've helped clients with in the last couple weeks where you can get a guaranteed 2% and a 5% up front. That sounds a lot better than the 1% CDs out there. Now, as I go through these 5 excuses why people don't have the retirement they want, I'm going to open up the phone lines because I'm here for you. As a retirement expert, I hope to answer the questions you have for retirement. That phone number, if you want to call in, is 850-478-3116. That's 850-478-3116. So if you're out there and you have some retirement questions or some estate planning questions that you want to get some non-biased, straightforward information, I'm your guy, and I'll be here for the next 30 minutes. Okay. Let's go to the next excuse, and I hear this a lot. I'm late to the game, Andrew. Andrew, I finally started thinking about retirement in my late 40s, early 50s, and I want to retire at age 65. Is it possible? Yes, it can be. Now, it gets a lot more difficult when you have only 15 years. I like to give the analogy of the tape measure. If you look at a tape measure that's 100 inches long, most of the time we live life from 1 to 20, we're not working. But from 20 to about 40 is where we do a lot of our trying to move up the ladder. And we don't do any savings because we're too busy living life, trying to put kids through school. And we come to this point where from 50 to 65, we want to condense what we should have done from age 20 to age 50. And it gets difficult, but it can be done, especially since we want to retire longer and longer these days. But there are solutions. It also comes out with a statistic saying that nearly 3 out of 10 retirees say they didn't start planning for retirement until they were 10 to 19 years from retiring. Again, the game becomes a lot harder. And this leads to my next point, which is you have to have a clear plan. But staying on the lines with being late to the game, you have to save smarter. If you're still working and you have a 401k plan, you want to make sure you get every free dollar through the match. But if you're investing over the match, you need to be very smart with your options because you don't want to have any dollar being used inefficiently. Also consider converting. Have you thought about converting your IRA to a Roth? There are lots of options out there to help you get to that point. Now, no clear plan. Now, I see this a lot, especially with the do-it-yourselfers that maybe even listening out right now. They're looking for some education, but they've done all the planning up to this point. And they say, Andrew, I don't need a financial advisor. I don't need anyone helping me because I've done well so far. And I want to give you a pat on your back because that's very hard to do, and I'm grateful that you've been able to do that. But when it comes to retirement, it takes a completely different strategy and a completely different expertise. Growing money is one thing, but making sure you don't lose it is another. Now, if you have no clear plan, we need to calculate how much retirement income you need. Don't focus so much on the retirement number. Do I need $1 million or $2 million? No, you need to focus on having a guaranteed income that it goes up with inflation. You say, well, there's no guarantees out there. There are if you look at some more conservative investments and kind of change your focus. Now, get expert feedback. Again, it helps to have a second opinion. It helps to have someone that have a different perspective to give you that. Also, take stock of excessive fees. It gets hard when you're trying to have back to too little earnings. If you have earnings and they're getting eaten away with fees, it makes it kind of very hard. You're trying to just tread water. Okay. Again, if you have any questions about your retirement or estate planning and you want some clear, straightforward answers, give us a call at 850-478-3116. Now, I have the pleasure today of bringing on Eric Bjorklund, who's over at SWAN-Capital Management. Now, Eric, can you tell me a little bit about SWAN Management?
SWAN-Capital Management is an SEC-registered investment advisor. What that means is we are set up and designed to work with folks just like you who have these client relationships, and you're able to kind of act as a conduit between the client and the end investor, essentially, and us who are going to manage the assets on your behalf and then on the client's behalf. One of the real benefits of this type of relationship is that you have the personal contact with these folks and really get an opportunity to understand their needs and their goals and what concerns them about their investments. And we are able to then work with you to try to find the best investment solution that we can for a given client.
It's hard to actually do all. It's hard to have a family. It's hard to give your clients the best client experience, build strategies to help them with college planning, retirement planning, and estate planning, as well as watch the market and manage their assets all in a day's work. That's why we have a specialist like SWAN-Capital Management to help take care of that part, so I can focus on the other things that we're good at.
You're exactly right. It allows all parties to really focus on our strengths.
Now, what's your role as a money manager when it comes to retirement planning?
Well, again, what AlphaStar looks to do when we're building portfolios is to build them with a construction that's going to best match a client's risk profile. Everybody's different. There is no one-size-fits-all solution. So what we do is we've got a variety of different models and strategies that we utilize based on an individual client's needs and wants. We use a number of different tools to do that. Primarily, we utilize low-cost ETFs to generate efficiency within these models. We strive for a true level of diversification. You touched on asset allocation, and what we really mean there is diversification means more than just a bunch of stuff.
Right.
So we want to make sure that we're getting exposure to as many asset classes as we can efficiently in hopes of delivering good, solid returns to the clients and doing so in a way that mitigates risk as well.
There's a reason why I picked SWAN-Capital Management. It's because we have very similar goals for clients' funds, and that is, first and foremost, transparency. Not only do I believe in education for clients, but the transparency in the fees they pay. I hate to hear clients when they're surprised to find out how much fees they're paying to their advisor. Not always does their fees equal the service they expected. And then the next one is truly diversifying. Diversification, we're going to talk about this in detail in just a second, but it's more than just owning a mutual fund. That's why I picked SWAN-Capital, is to find someone that had very similar goals. As an investment advisor, I have to have a fiduciary duty. And I would love for Eric to explain to the listeners what a fiduciary duty versus a suitability standpoint.
Sure, exactly. I think that's a great point and something people should be aware of. As an investment advisor representative, you've passed a securities exam, and you and I are both legally held to a fiduciary standard of care. That means that everything we do needs to be in the client's best interest first and foremost. We can't enact trades or anything like that simply benefit us from a cost or a revenue standpoint. The client's needs must come first. And we're legally held to that. A great way to think about the difference is stockbrokers and different agents and such are often held to a suitability standard. A good way to look at that would be you need a car to get to work. Old car broke down, you need a new car. Now, you could go out and buy an economy sedan. Maybe it's a Kia or a Hyundai, something like that. Inexpensive, not a whole lot of maintenance required, cheap to maintain, and it'll get you to and from work. You could also go buy a Lamborghini. That Lamborghini is going to get you to work, probably get you there a little quicker. Both would technically be suitable if all you told me was that you needed a car. The fiduciary standard of care means we've got to sit down with that client and really figure out what their goals are, what their needs are, what they can afford, what they want from this vehicle. So I think that's a great analogy that really kind of hits on the high point. There's obviously some more minutia and some details involved with that fiduciary standard of care, but I think that gives you a good understanding of the different standards that we are held to compared to many other folks out there.
We're going into a deeper level. We're not just superficial benefits, but we have to find out what are your true needs for now and into the future. So that plays really well to what I'm about to bring up, which is asset allocation. It's one of those things where you just don't set it and forget it. You constantly are coming back to it to make sure. Right now, if you're just tuning in, I have Eric Bjorklund over at SWAN-Capital Management, and we're talking a little bit about asset allocation today. Diversification is a big word that's tossed around a lot, and I believe it's more than having just all your assets in mutual funds consistent of mostly U.S. companies. When you're placing your hard-earned dollars, you need to look at the advantages of maybe looking at multiple asset classes. And can you explain why that's so crucial, Eric, to have it in multiple asset classes?
Sure, and I think you really hit on a key point there, Andrew, that diversification is a pretty subjective term. If I've got one stock or one mutual fund, I'm not very diversified, am I? If I've got three stocks, I guess I'm more diversified than if I have just one, but really, I'm not diversified at all. All I have is a bunch of stocks. And so what we like to do is we've built all of our models on a multi-asset class framework. try to use less fancy words, I guess, what we want to do is take a look at the different assets that are out there. Sure, we're all familiar with stocks and bonds. Mutual funds tend to be a blend of stocks and bonds for the most part, but there's a lot of other assets out there. Sure, there's a lot of news today about things like physical gold, physical silver, commodity futures. There's many kinds of bonds and different fixed income positions. So a big core of our philosophy is that we want to try to engage and have exposure to as many of these different asset classes as possible. The real rationale behind that is because we don't know what the next great asset class is going to be. If you flip on the news today, you'll see the Dow Jones and the S&P, they keep breaking records. The U.S., and that's all U.S. equities. U.S. equities have performed very well. But guess what? We all remember 2008, U.S. equities didn't do so great. Right. So by having a deliberate and a decided portion of our investment exposed to those assets, but then having many other asset classes layered in there, that really helps best prepare us for an uncertain future. We don't know who the next great performer is going to be, so we want to make sure that we're able to participate in the gains of just about any asset class, but protect against great losses in any one given asset class, too.
And that's a great segue about those great losses. Now, as you know, Eric, when we're looking at clients' portfolios, we see a lot of asset allocation models, but they don't always match up with their age. I only deal with retirees, but we joked about this previously last week. Is I'm looking through an account statement, and if the client wasn't sitting in front of me, I'm thinking they might be 40 years old, but they're in reality 70 years old, but their plan doesn't show that. How can that benefit you having multiple asset classes? So if another 2008 happened and you're solely in U.S. stocks, you might be headed for some trouble.
You're absolutely right, Andrew. I think it's all too common that people's portfolios and the investments that they do have really don't line up too well with their own risk tolerance. Again, everybody's different. Some folks are willing to take a little more risk in hopes of better returns. Some folks are quite conservative and would rather see much more modest returns and have less potential for losses. So what's really important is to understand what the client is comfortable with, and kind of get a good feel for their goals and objectives. And the client's age makes a big impact in that as well. If somebody's 65, 70 years old and there's a massive market correction, they take a big loss in their portfolio, they don't have a whole lot of time to recoup those losses. Younger folks can be more aggressive simply because they have time on their side.
Right.
So it is important as we get older that we do change our asset allocation and our investment strategies to match our current needs as well as our future needs.
Sure. And I always like the analogy, many families go to their family doctor, and they've taken care of them for 20, maybe 30 years. But when they get to the geriatric part of life, the more senior, they might need a specialist, a geriatric doctor, because they understand the aging issues. Same thing with money. You might have someone that took you from $10,000, took you to a couple $100,000 while you were in the accumulation stage. But what got you from there to here won't always get you to the next place you want to go. So when it comes to retirement planning, you need a specialist, not a general practitioner, someone that is completely focused on distribution and conservation. So that's why it's very, very important to make sure you have the right asset allocation. Eric, will you share with them kind of the asset classes and what someone that's 65 years old listening right now should be looking for in their portfolio? What kind of classes?
Well, again, there's a lot's going to have to pivot on the individual and what their specific goals and needs are. But from a more traditional, speaking in very broad terms, typically what you'll find with a more conservative asset allocation would include a greater allocation to fixed income. And by fixed income, we're typically talking about bonds. So that's debt that's either issued by the U.S. government, by a foreign government. Sometimes big corporations are looking to raise capital, and so they issue bonds. You might have heard of municipal bonds, where you have some possibility for tax-free earnings. So there's a number of different vehicles that would fall under that fixed income category.
For a lot of families, when they're looking at a portfolio, it all looks Greek. Unless you do this every day, it seems like the pages are upside down. What we do at SWAN-Capital is we have an asset allocation assessment where we actually take your current portfolio and turn the Greek to actually English, so you understand where you're sitting. And it surprises a lot of families because they don't realize how exposed they are in certain asset classes and have no exposure to other asset classes. Back to what you were talking about, Eric, is having a considerable percentage in bonds, not always U.S. bonds either, though, because a lot of times I see families only in domestic debt.
You're exactly right, and today we truly operate in a global economy, and so I think it can be short-sighted to fail to look for investment opportunities beyond our own borders. Obviously there's some terrific companies here in the U.S. that issue high-quality debt, and it's worth having in your portfolio. But that's not to say that there aren't equally advantageous investments available, in some of these foreign markets, whether they're the established foreign markets in Europe or if it's the more emerging markets. You hear talk about the BRIC nations. That's Brazil, Russia, China. Some people throw Korea in there as well. I think what's really important is to know knowledge is power here. Like you mentioned, some folks are quite surprised when we run through that asset allocation and show them what exactly they have. Just how limited in scope they actually are can be an eye-opener. So until we sit down with somebody and run through it, we can't say it's right or wrong. But what we can say is they sure should know what they have and understand and then be able to make the determination if it's the best thing for them.
Back to the transparency and the education part. And that's why I brought in Eric Bjorklund from AlphaStar Capital Management, is to share with you how important asset allocation is. And you can't get all the answers about asset allocation listening to the show. You have to sit down with someone that has your best interests in mind and wants to educate you on where you're currently sitting and where you may want to look at as a retiree. So if you're looking for that asset allocation assessment, that's what we do at SWAN-Capital. If you're looking to schedule that, you can contact us at 850-380-9558. That's 850-380-9558. Or check us out at swan-capital.com. I want to thank Eric for coming on the show today, and I look forward to the next show where we're going to talk about ETFs and break that down, and we're also going to talk about the fees and what to look out for there. Thanks again, Eric, for coming on the show.
Thank you. It's been a pleasure.
What your money would say. Today's financial landscape can be rough. One of the most important aspects of planning is choosing the right guide to help you navigate the road to retirement. Andrew McNair and the team at SWAN-Capital is dedicated to providing the very best service in the retirement planning industry today. SWAN-Capital is a full-service independent wealth management firm dedicated to providing guaranteed custom income plans that you cannot outlive. Contact Andrew McNair at SWAN-Capital 850-380-9558. That's 850-380-9558. The difference between SWAN-Capital and you retire once. We help people retire every day. You should be enjoying your retirement years, not letting worry keep you up at night. SWAN-Capital. Sleep well at night. Contact Andrew McNair at SWAN-Capital 850-380-9558. That's 850-380-9558. Again, that's 850-380-9558.
The Veteran Benefit Project, founded by Andrew McNair, president of SWAN-Capital, is a nonprofit organization dedicated to helping veterans and widows of veterans with long-term care expenses by qualifying for the VA's Aid and Attendance Benefit. Learn how to receive over $24,000 per year from the VA towards long-term health care. There is absolutely no fee associated with our assistance to the veteran, the widow of a veteran, their families, or any retirement community. Our goal is to preserve the dignity of the veteran and to reduce the dependency on the Medicaid system. Again, learn how to receive over $24,000 per year from the VA. Contact the Veteran Benefit Project 850-380-5137. That's 850-380-5137. 850-380-5137. Look us up on the web, veteranbenefitproject.com. At the Veteran Benefit Project, we are committed to helping you secure the benefits you deserve.
Retirement expert Andrew McNair. Changing the retirement paradigm. Now back to What Your Money Would Say. Brought to you by SWAN-Capital.
Welcome back. I hope you enjoyed that conversation with Eric Bjorklund, where we are talking about today is asset allocation and how to navigate that when it comes to your retirement years. I always like to think of the analogy as the food group. You know, if you're looking, as we were all taught, at the food pyramid, it's made up of bread, vegetables, fruit. You have to have a very diverse food group, or your health could suffer. Same thing goes for your financial life, because you don't want to suffer because you're focused too heavily in one section of the pyramid. See, as we were talking about, if you missed some of the interviews, we were talking about that so many families think they're diversified because they're in mutual funds. And they're thinking, well, all my eggs are not in one basket. They're in mutual funds, which owns multiple, stocks and stocks of companies. But again, you're focused in one food group. There's multiple asset classes. And with AlphaStar Capital Management, and what we do at SWAN-Capital is we make sure that you're in multiple asset classes, up to 24 different asset classes. So if another 2008 happens, you're not completely in the domestic section of the economy. Now, when it comes to investing and speculating, I get this all the time from retirees. They say, well, Andrew, I don't want to get out of the market now. It's at record highs, and I'm doing great. And I tell families, maybe it's time to finally pull the chips off the table, because when I'm listening to them, it sounds more like speculating. They say, well, the market's done this over this period of time, and we're, into the boom stage, and I got, X amount percentage last year. What's funny is now we're starting to forget that 2008, we lost 30% in 2008. They said, well, Andrew, I've got, 16 in 2009, I got 12 in 2010, and so on. But you can't just say the historical numbers are going to repeat itself. You never know what asset class next year is going to be a hero or zero. You just can't. If we had a crystal ball, I might not be sitting here. Again, if you're out there and you're a retiree and you have some estate planning or some retirement planning questions, we have the phone lines open, and we will have them next week at 850-478-3116. Also, another thing I want to talk about with when it comes to asset allocation is rebalancing. I like to use the ship analogy. When you set sail, let's say you leave Pensacola Harbor and you're headed towards Cuba. If you just set it south and just go back and get you a mojito and kick back, are you going to make it there? Well, probably not, because you got currents, you got different things, wind patterns that are going to affect your retirement. The same thing goes with your portfolio. A lot of times what happened in 2008 is a prime example, is that too many families were so focused in domestic stocks that when that domestic market fell, it took their whole plan with it. So I just hate to see that wipe out another set of retirees at the next recession. Again, I want to go through and tell you about some upcoming events at SWAN-Capital we have. We have 3 Veterans Benefits workshops coming up this month, so don't miss them. If you want to get some more information, check out swan-capital.com under our upcoming events tab. Also, follow us on social media. We're everywhere. We're on Facebook, Twitter, LinkedIn. Post some questions. If you say, Andrew, I don't feel comfortable just calling and giving you my question, post it on Facebook, put it on Twitter, or you can just email us at info@swan-capital. And next week, when we bring back Eric Bjorklund and we talk about ETFs and mutual funds, we'll answer it. Also, visit us at swan-capital.com and sign up for our free weekly newsletter where we send you updates of the market. Alrighty. I look forward to seeing you next week as we go to our 2-part series, 2 of 2, with Eric Bjorklund at AlphaStar Capital Management. I hope you enjoyed our show today on asset allocation. See you next week.